Today, we are diving into a really fascinating, deep dive strategic report. This thing was written for some of the biggest global investors on the planet. And it's a look at Bitcoin not as some speculative frenzy, but as a serious piece on the geopolitical chessboard. So, what exactly are the world's top investors seeing that most of us might be missing? Let's get into it.
So where do we start? Well, we start right in the middle of the chaos of early 2026. Bitcoin had just pulled off this incredible run to $125,000. It felt like the sky was the limit. And then, bam, a massive 50% crash. For a lot of people, this was a genuine crisis of faith. All the headlines were screaming that the bubble had finally, once and for all, popped. But this is the central paradox that the entire report is built on. While public sentiment, the feeling on the street, was hitting rock bottom, the authors argued that behind the scenes, the actual structural case for Bitcoin was getting stronger than it had ever been. And it's this great divergence between what people were feeling and what was really happening geopolitically that we're going to unpack.
Now, to really get a handle on this new reality, we first have to understand why all the old playbooks, all the old models for predicting Bitcoin's price, are basically being tossed right out the window. The game has just completely changed.
For years, there was one model that everyone, and I mean everyone, swore by: stock to flow. The idea was actually pretty simple. Every 4 years, the new supply of Bitcoin gets cut in half. It's an event called the halving. And this model predicted that as Bitcoin just got scarcer and scarcer, its price would have no choice but to go up. It was treated almost like a law of physics in this space. Well, this is where that crystal ball just shattered into a million pieces. The model was calling for a price way over $200,000. But reality, the market topped out at just $125,000 before it all came tumbling down. And according to this report, that's not just a small miss, it's a fundamental break. The market has just gotten way too big, way too complex to be driven by supply alone anymore.
And this slide, this right here, perfectly illustrates the real story. Bitcoin is maturing, it's growing up. Just look at this trend. The very first cycle delivered like 500x returns for the early technologists. Then you had the speculators come in for 90x, and then the big institutions for about 7x. This last cycle we're talking about, it was driven by nation-states, and it returned about 2x at its peak. So what does that mean? It means the days of those life-changing lottery ticket gains are probably over. The returns are getting smaller because the players and the asset itself are getting so much bigger.
Okay, so let's dive into what the report identifies as the single biggest change of all: the arrival of governments. This isn't about everyday investors anymore. This is about national-level strategy. And here it is. This is the absolute bombshell of the report. For years, anytime the U.S. government seized Bitcoin, they'd immediately sell it, just get rid of it. But then, in a huge U-turn, they stopped. They actually started holding it in a strategic stockpile, treating it just like they treat their gold or foreign currency reserves. And this isn't some quiet, behind-the-scenes policy tweak. No, it's being backed by some very serious moves in Washington. We're talking about a proposed bill to actually buy 1 million Bitcoin for the National Treasury. And at the same time, they're paving the way for stablecoins to handle payments. So the strategy becomes crystal clear: make the dollar digital for all your spending, and make Bitcoin digital gold for your savings.
And you know what happens when the US makes a move this big? The rest of the world has no choice but to react. We're now seeing a global scramble. You've got smaller nations like Bhutan and Ethiopia using their natural resources to mine it. You've got El Salvador just doubling down on their bet. And in this amazing twist of irony, China, the country that banned Bitcoin, now holds one of the world's largest reserves from all the assets they've seized. The game theory has totally flipped.
But just as this geopolitical case gets unbelievably bullish, the report just throws a bucket of ice-cold water on everything. It highlights two huge, under-the-hood technical risks that could, potentially, bring the whole thing crashing down.
Okay, so the first threat comes from inside the house. It's basically Bitcoin's own payroll system. Right now, the miners who secure the entire network get paid in two ways: a big guaranteed salary called the block subsidy, and then little tips from users, which are the transaction fees. The problem is, the whole system is designed to slowly shrink that salary down to zero, and the tips just are not growing nearly fast enough to replace it.
And this chart, wow, this just shows you how serious the problem is. Look at this. In 2026, over 99% of the entire security budget for the miners comes from that guaranteed salary. The tips, they're practically a rounding error. And here's the kicker.
That big blue slice is programmed to keep getting smaller and smaller, no matter what.
This whole situation creates what the report calls a security cliff, and it's scheduled for 2028. That's the next time the miner's salary gets cut in half. And if those transaction fees don't absolutely explode higher to make up for that lost revenue, you could see miners just shut down their machines and go home. And if that happens, the network security would plummet, potentially making it cheap enough for a bad actor to actually attack it.
The second major danger sounds like it's straight out of a sci-fi movie, but the report warns that this is no longer science fiction. It's now an engineering problem on a very real deadline. We are talking about quantum computers.
So experts are now forecasting that a computer powerful enough to literally break Bitcoin's core encryption could be a reality somewhere between 2028 and 2030. Think about that. That would put billions and billions of dollars in older Bitcoin addresses at risk of being completely drained. And while there is a fix, theoretically, it would require a massive, really controversial upgrade that, frankly, the community is nowhere near ready for.
Okay, so we have this massive, sovereign-driven bull case on one hand, and then we have these two terrifying existential risks on the other. How on earth does the report put all of this together to give investors a final verdict?
And here it is, the final verdict. Despite the security cliff, despite the quantum threat, the report's conclusion is to accumulate. They argue that the current price drop, which is driven by fear, is a temporary market thing, not a fundamental failure of the asset. It is the ultimate example of that great divergence between public sentiment and deep structural reality.
A huge part of the reasoning for this bullish take is pretty simple. It's the gold parity thesis. As you can see on this chart, Bitcoin's entire market cap is still just a tiny little sliver of gold. The report argues that if Bitcoin simply continues on its path to becoming digital gold and captures just a bit more of that market, then prices of $175,000 and up aren't just possible, they're probable. And this isn't just a theory. The big money is absolutely voting with its checkbook. A survey of institutional investors in early 2026 showed that an overwhelming 83% of them plan to increase their holdings. That signals a massive wave of capital just sitting on the sidelines waiting for the right moment to come in.
But the report is very clear. The future is not guaranteed. It lays out three distinct paths. The most likely one, the base case, sees Bitcoin continuing its journey as digital gold, ending up somewhere in that $100,000 to $200,000 range. But on either side of that, there's a real possibility of a sovereign-led super boom that pushes it towards $500,000, or a technology-led collapse that sends it spiraling back below $50,000.
And that brings us to the single most important takeaway from this entire report. The US government's decision to treat Bitcoin as a strategic asset. That was the crossing the Rubicon moment. It's the point of no return. The game is irreversibly changed. Bitcoin has graduated from being a niche internet money to being a serious piece of political capital on the world stage. And according to this report, that changes absolutely everything.